How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was recorded on December 21st, 2021. So, welcome back. It's just past Christmas. We're entering slowly into the end of the year. Hope you enjoyed your Christmas holidays with your families. And so let's take a look at what we have going on with the positions held by the institutions. Okay, here we go. So we can see that over the last few weeks, the institutions have basically been reducing their longs from 360,000 all the way down to 296. At the same time, they've been doing nothing except for reducing a little bit of their short positions. Okay, so what does that mean for the overall gold market? Why are they reducing their long positions? Well, we've been saying for quite some time that they have been keeping price in a range. Okay, this has been taking a lot of time. All right, so they're getting ready to make a major move. It's either to the upside or to the downside. Now, we have some idea of what move this is going to be, but to know 100%, like we've been saying, we need either the area of supply to be taken out or this area of demand to be taken out. Okay, but bottom line is we knew that they were going to be taking profits over here. Okay, closing off long positions, and that's exactly what they did. They closed off long positions, which caused price to go sideways, and now it's just stuck in a range. There's a good chance that the dollar is going to continue heading higher. We'll take a look at that very soon, and if that does, we are suspecting we're going to see a drop in price here. Okay, but that hasn't yet happened, so we're going to keep a close eye to see what takes place. All right, next we have oil. And we look at positions. They were long, very long here. They took profits on their long positions, causing price to start dropping. Okay, so you see they used to be up in the high 550s, 540s. Now we're down here at 478,000, and that is what helped to drop price down like this. And now we've contacted this area of demand. Okay, so if I zoom in here, you can see that was an institutional area of demand that we had mapped out here. And this is where price is reacting from. And now we're seeing the strength coming back into the market. All right, so what's next for this one? Well, let's take a look here. So if we take a look here, we can see that price dropped, contacted, now it's heading up. We got institutional supply just up here. So if price was going to continue higher like this, it would have to first get through that area. If it gets to that area, then I'll be looking for long trade signals. Until that happens, I'll sit on the sidelines. But interesting thing is that, you know, we take a look at short positions, they increased from 94,000 to 138,000. That's what caused price to drop. And now we have that slow increase like this. Okay, so what's going to happen next? It's hard to say. Price is in the middle of the ocean. Likely it's going to continue higher until supply is contacted, and then from there we'll be watching very closely to see what takes place. All right, let's go on to the next one. Let's see. Oh, let's zoom out. There we go. Now we have the US dollar. What do we have with the US dollar? So if we take a look at positions up at the 49,000 range, they've been slowly decreasing, and now we're at 46. Okay, we take a look at the shorts, 14,000 range, came down to about 11. Not much going on here, but the key thing that I'll point out here is that if you take a look at what's happening here on the chart, on the higher time frames, we have institutional supply that's been contacted. All right, so for price to go higher, this area needs to be removed first. If it doesn't get removed, there's a very good chance that what we're going to see is price is going to continue dropping from this area of supply like that. Okay, there's a decent chance that that will happen, but it's hard to know exactly if that is what's going to happen because there isn't any specific trends in play that would cause it to happen. Okay, so now let's take a look at the Aussie. The Aussie, we take a look at long positions and they're very cooled off. Okay, very cooled off long positions, and if you take a look at short positions, they're very aggressive. In fact, over the last few weeks, they've been a little bit more aggressive than usual. Take a look at this. 103, 113, 115, 108, 103, okay? Very, very aggressive. And what has been happening, price dropped into this institutional area of demand, okay? So there's a good chance that we see price rally up like this, and if that happens, there's a good chance that we'll see the dollar drop. But so far we're seeing signs that that is very possible, at least up into the trend line and potentially even further. Bottom line is shorts are more aggressive than the longs. We saw the initial profit taking, right down here from those short positions, which caused the move up, and now shorts, profit taking on shorts, which is causing that move up again. So we could see eventually them start to get back into short positions, which will fuel a move to the downside. Okay. Next we have the US CAD. What do we see here? If we look at positions, we can see that they have been increasing over the last few weeks. So we had 50,000, 51,000, 55,000. At the same time, 41,000, 38,000, 45,000. So not much going on here, not very clear, okay? But we can see that, there's been a stalling of price action here. But remember, we also have supply being contacted with the dollar. So that could fuel a move down like this. All right, so I'm watching to see if that's going to happen. There's nothing clear on this chart that would dictate that price is going to drop, but we are watching for that drop nonetheless. Okay, now we've got the US Swiss franc stuck in a range. We mentioned this supply and this area of demand. Price is stuck in a range. We look at long positions. They're still cooled off, although they've been climbing somewhat, and shorts have been doing nothing. We do suspect that this area will be removed and then price will continue upwards. Other than that, there's not much to see here. Euro is the opposite of the dollar. There's no demand here being contacted on the euro, but if the dollar does drop, we would suspect that this will rally up in price like that. In terms of the positions, if we take a look at the positions, we're not seeing anything very clear here. All we're seeing is that long positions are in the 190s and short positions are in the 200s. So there's a slight bias towards the short, but that's because price has just finished dropping. Okay. Next we have the pound. Look at the pound. We just had contracts expire and they pushed positions from 48,000 down to a very cooled off 20,000. Look at long positions, 80, 90,000, and then they dropped to 78,000. Okay. We just finished contacting this area. Okay, it's slightly above it, but it's pretty much in contact, which will fuel a move to the upside. Remember what we were saying about the euro? That's right, we're seeing a lot of signs that price is going to rally. So I'd have to agree that is very, very big potential here on the chart. Now, the interesting thing is the US dollar Japanese yen. We take a look at here, you can see that they were very aggressive with long positions and they closed them off. Okay, so they took profits after they removed this area of supply, took profits which fueled a move to the downside, and now we're starting to see a little bit more of a move to the upside. I think there's a very good chance that price will eventually turn down like this alongside with the dollar and head lower down to contact the weekly trend and potentially even lower than that, but we are watching to see what will happen for now. Last is the Kiwi. We have the Kiwi. They massively reduced their long positions after contracts expired from 30,000 to 11,000, and they just slowly closed off their short positions from 21,000 to 17,000. Okay, not much to see here. We have institutional demand here, and just like with the pound and the euro, we suspect that we're going to see an upside push here, which will also be fueled by any potential move to the downside on the dollar. All right, ladies and gents, so there you have it. That's the CFTC report for the day that was recorded December 21st, 2021. Hope you enjoyed it. If you need to contact us, you can reach us at www.whiteoakfx.com. Thanks and have yourself a good one. Take care.